Okay, let's talk about high time frame fundamentals and when will it shift in high time frame. So I've been through. I'm now at the month 7 at the mentorship ICT. So I've spent like like roughly 3 months inside of this trying to learn this, and I've covered basically like 6 months now. So I'm moving into month 7 now. So 6 months is basically like I think it's like 40% of the high time frame fundamental look like. So yeah, I just wanna capture this moments and how I think about the market. It may change in the future, of course, going through all those months left in the future. But yeah, for now, this is my overview of the high time frame fundamental and how can we just use this to get into the chart and trying to predict the high time frame. High time frame like long term for the next two. So basically, to ICT, long term is about 3 months. Yeah, 3 months. So he said like long term to him is like 3 months, but like high time frame, like multi long term is like this move. So we're looking at the monthly chart here. Sorry for all these all these tabs, like it's so many, but yeah, that's how you can learn it. That's how I can learn it from my perspective. Okay, so multi long term high time frame is what is like when price just like, yeah, it's this one, like months, like years. You can see years. It's like 2001. I'm looking at the previous chart, like chart in history. So this is like 2002 and this is like 2004. It's like 2 years of transpire in price. This is like multi high time frame long term, but his long term can just be 3 months. Look at this move here. 1 2 3, roughly 3 months. Okay, and this is also high time frame. So what's the trend here? Even though the trend like multi high time frames like long term bearish, we can still nail like roughly like 2 or 3 months retracement back, and we can still participate in this move. This is like long term for him. So yeah, so how do we nail this move? How do we nail this move in high time frame? Of course, this is like we're using the chart that is very trending in terms of high time frame. There are many times where chart just doesn't show this clear price action, of course, but yeah, I don't know why at this time price is showing like really good price action, very clear. So we're just talking basically about clear price action, okay? Because like if we're talking about consolidation, then it's not high time frame trending, okay? It's like short term. Then we're going to talk about short term trading, and we can trade inside of the range bounds like this, okay? But that's a whole another different story. But this one is like high time frame. So how to get back to the story, how do we nail this move from here to here? That's like this move is roughly like, I think it's hundreds of pips, yeah, 1,000 pips. So each of these moves offer like 1,000 pips back, even though high time frame high time frame is bullish. So first of all, we have to look at the market as this. The market always has a trend, okay? Bullish, bearish, bullish, bearish, and the market moves from premium, okay, premium to discount to premium to discount. But sometimes premium is like this, okay? It will take out the high and then go down again. Take out the high and goes down again. So yeah, this is basically the market. Look at this: high, lower, high, lower, high, lower, high, lower. Okay, when it's bullish, it's like high, lower, high, lower, high, lower, high, lower, high, lower, high. Okay. And price is fractal. Remember, price is fractal. So every time frame is like this: the monthly, the weekly. Okay, high, low, high, weekly. If we break down from the monthly to weekly, we can see like smaller swings here, and then the daily also. So yeah, let's assume I'm not going to talk about like from A to B. We can we can search for those things in baby pips, but so how can we nail this high time frame? First of all, what I have conducted from the market is like okay, for example, this monthly range, okay, this monthly is like this. So for example, we want to nail this move up there. But if we break down from monthly to the weekly, if this move down here, look at this, from A to B here, this move down, we can see like many swings of the weekly. Okay, breaking down from the monthly to the weekly probably gonna look like this. And then it's still two moves. Okay, we can see the monthly is just like one move like this, very clear, but the weekly, in these move up, the weekly we can see like many swings up. From this move down, we can see many swings down, right? From this move up also, we can see a couple of many swings up. So when prices start pushing up like this, first of all, okay, so from this move down, we can also see smaller move from the daily. Okay, for example, this is the daily chart. Okay, and from this swing of the weekly, we can see many like plethora of daily swing down. Okay, so first, for example, the daily will shift first. Okay, from this point of origin, this point, the daily will shift first. So for example, I'm just gonna draw the daily. Okay, this is the three move: monthly, weekly, and then daily. So if we push it up, the daily is gonna shift first. The daily has to shift first. Okay, or else we're gonna keep being bearish. So the daily shift, if the daily shift and it break up structure shift here, it doesn't mean that it's gonna be bullish right away. What if there's like a weekly range like this? Okay, open, high, low. So that, let's say for example, this is the move. Okay, this is the move, and then daily starts to be pushing up, and then this is the exact same move here. Oh, here, that is the exact same move. We can see like three more daily swing here, even though we only see one swing in the weekly. So when the daily shift up, it can go up to the premium of the weekly. So it doesn't mean that it's gonna be bullish. It doesn't mean that from here, right, we're here, and then in the monthly we're here. It doesn't mean like we're gonna go to the premium right away, because before we go to the premium, right, before we go to the 50% of this range, we have to passing through a premium of the weekly range first. Okay, so if this premium is showing bearish again, then probably very high probably we're going to be bearish like this. Okay, even though the daily shift, right, even though the daily shift. But like when weekly just like taps into premium and it's just kept being bullish again, and in the daily we can see that multiple swings that is just like violating high, like open floats showing bullish, then of course high probably, very high probably, it's going to go back to the monthly premium up there. So from here, this is the technical outlook that we have to look at. We have to view the market in this way. We can just say like, I stuck in a trap where the daily just shift a little bit, and high time frame fundamental, which is the thing that we're going to talk about right now after this. When high time frame fundamental is showing that it's bullish and the daily shift, I'm just going to buy here right away without looking at the weekly range like this, right? Without looking at the weekly. And ICT also mentioned about the thing when the market is very high likely to remain its trend. For example, it's very high likely to remain the trend and keep being bearish than to see a potential reversal. Okay, so we can't just say like it's pushing up here, then we're gonna buy right away after it retraces back here, and then we're gonna buy. It doesn't move that way. Okay, we have to wait for price for more confirmation. For example, the high time frame core content month 4 ICT order block. This video, well, yeah, we're not gonna watch those mentorship, but he waits for price to just like pushing back into the weekly order block and then rallying up. Okay, and then it rallies up. Okay, so that's the technical, that's the first technical that we have to look at the market. Okay, even in the swing trading concept, he also mentioned this. If the daily fails, we can still selling at the weekly, right? So if the daily fails, it doesn't mean like the weekly and the monthly is going to be bullish, right? It doesn't mean that way. It just mean like the daily just like shift a little bit. That's it. Okay, so this is the technical that we have to look at. Okay, so apart from technical, apart from technical, now we have to look at the high time frame fundamental analysis. So what do we have in the high time frame fundamental analysis? First of all is the seasonal tendency. Okay, for example, this okay, let's from these three charts, let's move all these here, let's move all this here, and then let's keep it here in case we want to talk about this in the future. Let's keep this here. Okay, sorry guys for this inconvenience. Okay, let's look at the real chart here. So for example, at this time, for example, we want to nail this move up, okay? Or at this time here, we want to nail this move up to the monthly premium, right? But look, as soon as I break down, we can see like smaller swing up the weekly, right? Well, yeah, except for when the weekly just break the structure here, okay? If the weekly just rallying up, it can be bearish at any time, except for the weekly break structure here. Okay, so coming back from the point of origin here, this is the point of origin. Where can we draw this? Okay, so for example, we want to nail the move bullish. How can we do it? First of all, look at the seasonal tendency. Always seasonal tendency first. What is it? We are at month 7. Okay, month 7 when price shift up, month 7. So seasonal tendency of USD, normally look at this, month 7, July, normally it would be bearish. Where is the high probability potential bullish scenario? From August. Look at this, August, it's starting to just like, okay, so if you watch the seasonal tendency video of ICT, he mentioned that the end of the bearish trend is also a significant indicate that it's going to be a bullish trend. Okay, so this is the low of this bearish seasonal tendency. So when the market tells you that this is the low, this can also be a potential shift. Okay, this can also be a potential bullish. Okay, a potential bullish scenario. So from August, we want to buy from August or September. And also looking at the bonds, also 30-year bond. As you can see, bond represents the interest rate, and interest rate is the single most influential driving force of the market. Okay. Oh, I'm talking so many knowledges, so many pieces of knowledge inside of one video, so it's gonna be long. Okay, hard taking. So as you can see, August is when the price of the bond, which is the interest rate market, top out. Okay. Usually it tops out at this point in August, and the interest rate market moves inversely correlated with the DXY. So normally this will bottom out and bond market top out. Okay, high probability August is going to be bullish, but we're still at July. We're still at July. Okay, so seasonal tendency is X. Okay, it does not support bullish at this point. Nevertheless, we have to look at all the aspects too. For example, okay, first of all is the seasonal tendency, right? Seasonal tendency does not supporting price. What else? Second is what is interest rate market, which is the 30-year bond. Let's look at the 30-year bond at this time. This is like the 1st of July. Oh, it's my birthday. 1st of July 2000 and sorry guys, I'm 1st of July 2003. Where is it? Okay, the 1st of July 2003. Look at this. So look at the bond. Look closely. The 1st of July 2003. Look at the interest rate. Interest rate is at the high, and it starts to topping out. Look at this. Starts topping out here. Break the structure lower. This indicates that the bond market is going lower. Potential going lower. I'm not saying like, yeah, 100%. Okay. These are all probabilities. So when the bond market's trying to top out here, it means what? It means the interest rate is they're raising the interest rate. Okay, it means the interest rate is increasing soon. Interest rate increase, bond decrease. That's just like normal macro economics view. So when we see a potential interest rate raising, the bond decreasing, which means the DXY is going to be decreasing also. So at this point, when the daily shift here, we have what? We have the interest rate supporting price. And I've said from ICT, okay, quote unquote, interest rate is the single most influential driving force of the market. Remember that. So when the bond is topping out like this, it's showing what? Showing that DXY is going to be bullish. Okay, it's showing DXY is going to be bullish. And then we also have the yield. Can't see the yield here. What is it? Where is the? Okay, so from the 1st of July 2003, the yield, which is inversely correlated with the bond price, the yield is also bullish. So it's supporting the DXY being bullish. So interest rate is on our side. Second is, so interest rate supporting our side, and the daily shift, okay, it's shift, and then this range of the weekly is pretty much okay. We don't need a weekly market shift here. We only need yeah, this move rallying back. It's also long-term price retracing back for us. So at this move, retracing back to the premium here, this is the target for us. We have the first is the breaker, and then next is like the order block here. Okay. So from this point, we're gonna go up there, right? We are marking a potential long-term, like 1.5, 2, 3 months being bullish. Interest rate is on our side. Interest rate on our side. And second of all, what do we have to look at? We have to look at the commercials data. Okay. So first of all, it's like seasonal tendency. Okay, seasonal effect. Second is what? Second is the interest rate driven. Yeah. Interest rate driven. Seasonal tendency. Oh, sorry guys. I really didn't prepare for this. And third is caught data, which is commitment of traders, which is the commercials. So due to ICT from his mentor Larry Williams, one of the best traders in the world, the commercials data is also a very significant point. Sorry guys, it's just my nephew just came into the room. Okay, so coming back here, we have interest rate driven, we have the seasonal tendency. Oh, what's wrong? And then we have caught data, which is the commercial. We can track that are the commercials buying or selling at this point. So commercial data, let's look at this point. Oh, it looks so okay. So this is the 1st of July 2003, and we're seeing what here? We're seeing the 1st of July 2003. Let me look at this. Okay, let's look at the 1st of July 2003 here. Just remember, the commercials, one of the trap that I really like, ICT, he didn't mention about this yet. I don't know if in the future when I watch more videos he will mention about this, but we don't look at the hedging at the current time. Okay, for example, we're looking at the 1st of July here 2003. We must look like we must track before that what have the commercials been doing. Okay, so for example, okay, so let's go to the basic first. When this line is like the red line. Okay, these are the commercials position. So when they're going down, we're always looking back at 12 months hedging. Okay, so when it goes down below the 50%, which means they're net shorting, right? So if we're looking at the 1st of July here, are they net shorting or buying? Of course, look closely. They're net shorting. Okay, they're net shorting. But before that, look at this. Before that, a little bit time here, they're what? It has been above the 50% for so long, which means they have been net longing, right? When price is pushing up here, they have been longing here. What the heck? Oh yeah, here. Look at this. Okay, so this is like the 1st of July, this one, the 1st of July here. We're looking at the 1st of July 2003. Yeah, the 1st of July 2003. Why is it looking so weird? Sorry guys. Okay, this is where we're looking at price, the 1st of July 2003 here. Okay, so price has been, okay, let me mark out this one. Price has been bearish. Look at this. Okay, look at the chart. Look at the chart. Okay, here, price has been bearish for so long. We can see in the caught data is also the same. It has been bearish. Okay, and we're looking at what? We're looking at the 1st of July, which means they're shorting. But we can't just say like, oh, it's below 50%, we're gonna short this. No, we have to look in the past. Look in the past. What have they been doing? And they've been net longing for so long. Okay, it's going below 50% a little bit, and then the net long again. Look at this. Okay, then the net long, and then the net short, and then it goes down, and then look at this. There was a period of time that they net long from May till July till now. Okay, they have been net long for 2 months here. It goes below 50% a little bit, the net short here, which caused this downward move, and then when it's going down, they're net longing for 2 months. See, the net longing for 2 months, and then now when the market shift, this is when this net long is released. Okay, when the market shift in price, listen closely, when the market shift and then they start to net short again, this is when their previous net longing will be released. Okay, they have been buying here already. They have been buying here. They start to buying here as price going down. They're buying here, and they're buying. Price is going down. Consolidation a bit, breaks down. When they start to net short again, this is when their previous long position has been released. Okay, at least it is bullish, but we're still here. Okay, we're not going to talk about this. This is at the future. So we have caught data with our caught data and what? Caught data and okay, caught data and interest rate driven is on our side. Okay, only what? Only the seasonal tendency is not on our side. Okay, so when two of this confirm and when price shift like this, this is a very high probability the market's gonna, for the next couple of weeks or months, very high probability price gonna move this way to seeking what? This is when we mark out the target. What do we mark out? Premium PD arrays. As in the PD array matrix, when price is at deep discount and it shows displacement, it's going to reach out to premium. Okay, at least price is going to retrace back to the 50% range, because when they're shorting, they can't short here. This is too expensive for them to short, or too cheap for them to short. They have to bring price into a fair value. Okay, which means a premium. This is when they can short. Got it? This is when they can short down, right? So we can nail this move with interest rate driven and a caught data. And let's talk about the open interest a little bit. The open interest before that. Okay, let's look at this. Before that, price is bearish. Okay, price is bearish. What has the open interest has done? They're net shorting. When the open interest increase like 15%, 20, it means that they're shorting. Okay, you just have to understand that, which means that the commercials are selling. Okay, they have been selling, and look closely. Before price shift, look at open interest. It drops heavily here, and we're here, right? It drops from here to this point. This is what? This is indication of bullish. Okay, they're buying, coupled with the caught data. They have been net longing for 2 months here, and now they're releasing the price. This is very high probability commercial data is with us. Got it? Got it? Okay. Well, yeah, I'm talking alone, but yeah, so this is when we're looking at short term. Are there any SMT divergence? Are there any SMT divergence here that we can see? There is a SMT divergence. Look at this. Okay, so another indicator, which is smart money 2 SMT divergence, which is EU lower low and DXY lower low 2. This indicates what? This indicates the smart money has involved in this move, and they're buying this shit out. Sorry, they're buying this stuff. causing the market to create an imbalance here. This lower low showing the price is distributing sell, and this lower low price is accumulating long, taking sell side liquidity, and the displacement up. This is indication of bullish for us. So when price rallying down, we're buying there. Okay, we're buying here at this breaker. Let's look. Okay, look at that. Look at this. Buy, retracement back into the weekly, buy again until what? Until it reaches premium PD array. Where's the premium PD array? Okay, we have closed all this range. We have that weekly breaker. Okay, I think we've touched it. This is when we can expect bearish again. Okay, look, we have nailed price. This is what, 1 or 2 or 3 month cycle. Okay, and okay, let's talk a little bit about more quarterly shift also. This video is going to take long. Let's talk about quarterly shift. So quarterly effect is also a move that can help us to indicate this one. Quarterly shift. So due to ICT, every 3 months, okay, what does it mean every 3 months? Every 3 or 4 months, price is going to have a shift in the marketplace. It doesn't mean that it's gonna reverse. Okay, I'm just saying like it's gonna be a shift. It's gonna be a shake-up in the market. Price is either gonna consolidation or offer retracement back. If the trend is bearish heavily like this, it's very high probability that we can see the price either consolidation like this or having a shake up, like retracement back a little bit to look for more sells. Okay, so look at this. Price has been consolidating from starting from February, price consolidating, and to this. What is this? The 1st of June. This is 4 months, and price is pushing up. Okay, starting of June. So look closely again. Starting of June. So we know that the June, okay, from February or March, something like that, price have a little bit consolidation. So the next quarter, which is the next 3 or 4 months, price is going to have another big move. Got it? So we're looking at this February or March, okay, and this is June. This is 3 or 4 months later. Price do what? It retraces back. So starting of June, we know that when price rallying up like this indicates okay. So this also shows that the quarterly effect is also on our side, right? Let's see. So this is June, okay? Starting from June, price rallying up. So from June, July, and August, at least till September. Sometimes it's gonna be 2 months, okay? Sometimes it's not gonna be like 3 or 4 months. Most of the time it's 3 or 4 months, but sometimes it's just gonna be 2 months, okay? So starting from June. So we would expect the next quarterly, the next big move in the daily time frame, it's going to be at September, right? Sometimes it's going to be August right away, but very rarely. Most of the time, August, September, or October. Okay, let's see. Look, price pushes up into deep premium, and then what? And then at September, price do what here? It's showing a new move. Okay, look at this quarterly shift. Look at this quarterly shift, baby. Oh, I've never seen anything that is more accurate than this quarterly shift. Okay, so we're just expecting this move to going up to deep premium. Look at that. Look at this. This is like, oh, this I think it's thousands of pips. Okay, 1,000 pips. Okay, that's it. This is how we can frame the high time frame. To me personally, this is what I've learned from the mentorship, that it's gonna do this. I've spent like so many months for this. Okay, and at this time when price is rallying down, we would expect another bearish shift. And what do? We'd go in back to this same thing, right? Quarterly shift. I think quarterly shift is like something extra. You can add it. But interest rate driven and caught there. And then what is the most important thing is when the technical aligns with this high time frame fundamental. Understand? When technical is not aligned, we can still keep being bullish. Got it? But when technical aligns, which is what it shows impulsive move, displacement. It show break structure, lower low. Look at this. Look at this. It breaks all this low displacement back huge on the weekly. The weekly also failed this order block also. Huge displacement. And the trend is bearish. At this point, you're looking to buy or sell. You're looking to sell. Got it? And then what? And then market just dumped down to go in to following the trend. Okay, so what is swing trading? Okay, let's talk about swing trading a little bit here. That's how you nail high time frame, right? Okay, let's talk about swing trading in another video.